All right, we're live. Welcome back to Bitcoin.com's Token Narratives. I'm Graham Stone, and I'm joined this week by Bitcoin.com Chief Scientist Andrei Terentiev and CEO Corbin Fraser's back. David's out this week due to travel. All right, guys, let's get into it. So after ranging between 100K and 110K for like the last 2 months, Bitcoin finally broke out to the upside. And at the time of recording, it's sitting at around 115, 116K, slightly off its latest all-time high, which was 117K just a few hours ago. So let's take a quick look here at the prediction markets. Let me share my screen. We've got prediction market on markets.bitcoin.com showing the latest Kalshi prediction. And it's saying, when will Bitcoin hit 150K? We've got basically 50-50 odds showing Bitcoin, predicting that Bitcoin will hit 150K by the end of the year, and around 16% of people are saying by October, Bitcoin will hit 150K. Do you guys care to weigh in on those odds?
I think it's pretty good. I think it's, I feel like it's underpriced at this point. Like,
Yeah.
you have 117, no rate cuts at all yet. I would expect we at least get at least one this year. Trump is calling for 300 bip rate cuts, so 3%. Don't know if that will happen, but that would be an instant 150K. I feel like all the macro stuff is still really good, and I don't see this train really slowing down. I think typically like December, November are like the best months for Bitcoin as well, historically. So it seems like if you get another, if we're seeing like a 120, 130 in I don't know, September, 10 to 15% by the end of the year doesn't seem crazy at all. So I'm going underpriced right now for the 36% or the 40% that it's at right now.
Yeah, I was taking a peek at this last night. I was kind of thinking the same thing, that this all feels very, like there's a lot of conservatism right now in price predictions, it seems. And yeah, I'm kind of with Andre here. It seems like there's potential God candles in the say next 6 months, and we've seen this in previous bull cycles where you see these monster jumps for like day after day. You wake up and you're like, okay, that was a big one. Then you go to the next day and you're, whoa, another great green looking candle. Look at that, 2 in a row. Oh my goodness. And then suddenly you're just kind of like euphoric. And this is when things get really weird. And I don't think that that has been priced in.
There's no God candle. No
God candles yet. Yeah. I mean, this feels like this is like a nice leg up, but this doesn't feel God candle-y. So yeah, I'm kind of more on the this doesn't seem like the bull market is priced in yet.
Yeah. And Bitcoin having sort of coiled up here for the last 2 weeks, we know that when that happens, when it breaks out, either way, it tends to do so bigly. And just summarizing, I guess, the tailwinds here for Bitcoin, like jumping onto what Andre was mentioning. So we have institutional demand. You've got relentless inflows to the ETFs, the Bitcoin ETFs, just green day after green day. The most successful ETF launch in history just keeps grinding up. You've got the weakening dollar. The dollar has had like its worst first half of the year, I think people are saying, in like 20 years. You've got the big beautiful bill and its sort of implications for money printing, persistent US debt and deficit problems. And then like on the global level, it's kind of the same situation. more money printing, global empty money supply ramping up. Nations are sort of being pressured into increase their military spending around the world, which means more fiscal spending. And then, yeah, as Andre mentioned, there's sort of growing momentum around the rate cuts. It seems like that's looking more and more likely. The last maybe wild card here that I'd like to point out is Musk's mention of Bitcoin in relation to the America Party. So Musk is back in the news, sort of trying to pump Bitcoin. That seems bullish.
I think someone leaked one of his likes as well, which was that he might be accumulating Bitcoin privately, and that was being shared around on X. Whether that's a legit screenshot or not, you can't really trust anything on X these days.
That one might have been debunked, but
was it?
for sure, the mention of Bitcoin in relation to the US dollar is trash is cash, Bitcoin's the future, America Party, something like that was how I understood that one.
Sure, I like it. Just I guess curious, have you guys actually bought any Bitcoin ETFs?
No, I don't dabble in the TradFi. Sorry,
Andre, are you a ETF?
Are
you an ETF consumer?
No, not an ETF consumer, but I like my original Bitcoin. But
you
going
like that
on the
raw
ETFs,
dog.
apparently the ETFs are like the most successful financial product like ever for these ETFs. So going in on the bullish tailwinds, it's like I kind of had this thesis that Bitcoin was like too big to fail, and that's like kind of why I started buying like whatever in 2017. But now it really feels too big to fail. You've got all the TARDIFIs being like, okay, this thing is money printing because we can issue these ETFs for the fake Bitcoin. The government is now like, okay, we need to collect as much Bitcoin as possible because our currency is trash. Every bank is now getting involved. And it's just become this like almost weird, too big to fail institution where like, how can it go down? Now everybody's hand is in the jar. So if it goes down, it's like just massive implosion of the whole like financial ecosystem. So yeah, like it really feels like
we die together. Yeah.
Everybody's hand is in the cookie jar right now with Bitcoin.
Yeah. So just on the ETF question, I feel like it makes more sense if you're in the US. Like obviously it's harder to get exposure to the ETFs here in Japan. But the other thing is like there's 401k tax implications you can play around with your with the Bitcoin ETF that you can't take advantage of just holding like an on-chain Bitcoin. Correct me if I'm wrong, Andre. But that seems like a reason a lot of people are using the ETFs.
I think that's a big reason. I also just think it's just like for people that just like don't care and they're not going to go like, okay, I got to open up a Coinbase account or like whatever. It's like, oh, it's now on Robinhood or now it's on Vanguard. I already have my money there. Okay, I'll buy some Bitcoin because it's doing well. So I think that's like attracting that crowd that just can't be bothered to go figure out, okay, I can buy Bitcoin on Coinbase because in the end they're just going to be holding it like on the exchange anyway. So what's really the difference for them kind of thing? So I think that's definitely attracting that crowd. And like maybe there's for stuff like, okay, my retirement account is going to be Bitcoin. I don't know how big that crowd is, but it must be at least to some degree pretty big.
All right. Let's dive in a little bit to the Bitcoin corporate treasury meta. So just a quick update on, like, as we do every week, there's just a relentless flow of money into the Bitcoin corporate treasuries. Here's the chart that I like to bring up from bitcointreasuries.net, just showing the chart just going up and up and up and up. These are all like corporate entities holding Bitcoin. In the last week, we had Sequan's communication confirming that they've raised $348 million to purchase Bitcoin. Metaplanet, I don't know, using more of their marketing juice with escape velocity. Talk of escape velocity. They are now talking about the new goal, 210 Bitcoin by the end of 2027. Just another one here from Japan, Remix Point. This, people don't talk about this one very much, but I actually had the pleasure of meeting someone from Remix Point at a conference in Hong Kong, and yeah, it's a Japanese company that's also accumulating. It's TradFi company that's also accumulating Bitcoin. They're committing 215 million to Bitcoin. So, Corbin, I'd love to get your thoughts on this whole Bitcoin corporate treasury meta. Good for Bitcoin adoption?
I mean, it's great for Bitcoin price, right? Good for Bitcoin price. We like that. More people buying our bags. Yeah, I mean, I think on one hand, it's great to see. I think the game theory of it is interesting. I do think that there's like two classes, as far as I can see, of these like treasury Bitcoin accumulators. There's like class A, which are like the Bitcoin maxis, which have now found a way to sell altcoins without it being an altcoin. And that's probably more like, yeah, their stock is the altcoin. And, you know, we all know that the ultimate Bitcoin maxis don't like anything that's not Bitcoin. But if you have stocks that hold Bitcoin, that's somehow like, that's okay. So stocks are okay as long as they hold Bitcoin. So that, you know, they're not trading shit coins. They're trading stocks which hold Bitcoin. That's pure. That's like, that passes the sniff test. So there's that like class A group, and I would put like a whole bunch of, you know, like the big name, you know, the Pomps, the Cantor 21 Fitzgerald thing, the, you know, the probably even like, yeah, any of the David Bailey stuff, like any of those, that group. And then there's like, so that's like the class A group of like the maxis that are now creating these treasuries, launching these new, you know, SPACs and doing the treasury game. And then there's like the class B version, which are just these kind of like, I don't know what you'd call them. They're kind of like, I guess, kind of riding the coattails. They're like the coattail riders, seeing all of the action that's happening from the class A. And they're like, we've got a dumpster stock. Let's just hold some Bitcoin and try to pump this thing and see what happens. So I think there's various levels of quality in these treasury companies. And I think there's the micro strategies, class A. And then there's like, I don't know, these no-name stocks that I've never heard of, nobody's heard of, but now apparently they're like accumulating. So cool, congrats. You know, ultimately I think it's all kind of like a little bit weird, but at the same time, I'm not against it. I think it's actually kind of, it's a clever way to deal with like, yeah, struggling businesses, struggling stocks that are just like not performing as well as they ought to. And I think the Bitcoin exposure is kind of cool. It's fun. It's like a new spin on it, right?
Is it anything but bullish for Bitcoin, for the price of Bitcoin and the adoption of Bitcoin?
Right now, no. I would say it's just like it's extremely bullish for
vertical
Bitcoin.
line up.
It's vertical line up, but it's also one of those things like I'm not one of those people that believes like Bitcoin's going up forever. I mean, maybe I would love to be wrong, but I don't believe that it can defy gravity. Gravity will kick in and it'll come back down at some point. And when it comes down with all of this like mass and inertia, what does that crater look like at the end of the day? I don't know.
So there's this argument made by Lynn Alden, who just released a new piece on this topic. And basically she's saying that like the way that, so effectively these Bitcoin corporate treasuries, they're kind of like a way to accumulate Bitcoin with leverage, right? Like that's kind of how these companies, they issue bonds. Now, one of the arguments she's made in her piece is that the way that they are able to accumulate Bitcoin, by like issuing bonds, means that it's less likely that they're going to get liquidated on the way down. Or I mean, they like if the Bitcoin has to fall further for longer, for at least for the companies who structure these things properly, like probably MicroStrategy, I don't know, maybe MetaPlanet, they are able to stomach the downside for longer, and they won't have to like spit out their coins at the end of it.
They can always raise more money too.
Yeah. So you could argue, that it's not as bad as previous what's the word? Previous hype, leverage, accumulate as much Bitcoin situations.
Yeah, well, I think there's like a couple of things. I think like one thing that was actually interesting coming out of me on the MetaPlanet side was I think they were talking about now they're going to start using some of their Bitcoin to buy like cash flowing businesses and effectively make them basically like Bitcoin buyers, because you know they take the cash flow from whatever business like that is and use it to buy BTC. So I think like the interesting thing, I don't know about all the Bitcoin treasury companies, but I think like a decent amount of them actually have like cash flow, like decent cash flow operations. So even if like now they might not be growing their cash at all, which is probably why their stock is in the toilet. Because if you're not growing your revenue, of course your stock is not going to like go up, right? So I think like there's also probably some durability for these companies as well, because it's not like they're all in on Bitcoin and like they're using the rising price of Bitcoin to pay their employees. At least I hope not. To be just maybe that's the code writers of the code writers that will be doing that.
That's the class C.
That's the class C. So I definitely think there is like more durability, and like you said, right, like that goes back to like, okay, well they can raise more cash, and then that goes into, well, if everyone's hand is in the cookie jar, then it's in everyone's best interest that they are able to raise more cash, so that if the class B company gets liquidated, well, there's a bigger chance that the class A company gets liquidated. And now you have all these like structural problems where you almost have like, okay, we got to, the financiers have to be like, well, we have to bail them out. Otherwise, you know, if the class C company dies, now MicroStrategy might die. And it's like, we don't want
And then
that.
you start thinking, well, how many of those companies could make it into the S&P 500? And then it turns into this whole like, what if in the future there is a Bitcoin bailout, which would be pretty funny.
Andre, what you were saying there about MetaPlanet, sort of like a diversifying, I guess, into VC, using their Bitcoin holdings and profits to buy cash flow positive businesses. That kind of reminds me of what you saw with like EOS, some of the early ICOs. They accumulated a ton of Ethereum. They didn't do anything, but they ended up with this massive treasury and became like foundational VCs in the crypto industry and made a ton of money that way. So that's also an interesting part of this, I think.
Yeah, at the end of the day, it gets boring just sitting there and holding your bags. You do have to try and do something.
Yeah, at some point you do have to kind of create some new utility or some new value for the world. Otherwise, it does start feeling a little Ponzi-like. But
All right, let's move on to a little bit away from Bitcoin into crypto to an extent here. So let's talk about the stable coin meta. So obviously, stable coins are blowing up. They're what everyone's talking about in the crypto realm. And I want to ask the question: could stable coin adoption actually be the thing that finally takes crypto mainstream and like enables all the things that like people in crypto have been talking about since when I got into it in 2017, like yeah, on-chain stocks, and using on-chain stocks to as collateral, and like all the DeFi, the modular
Payments.
DeFi, all that stuff.
Payments.
Yeah, exactly. Payments. Yeah. So all these things, like, are we at a point like with the incredibly receptive, the way the market was very receptive to the Circle IPO. Obviously, there's huge demand for it. People are saying, okay, this is the thing, maybe. What do you guys think? Could stable coins be the thing that actually finally takes crypto mainstream?
Maybe in the sense of, well, I saw this goes back to like the payments side of things. So I think like a lot of these stablecoin issuers are also saying like, okay, these are going to be like the new payment rails. And then when people are like actually breaking this down, it's like, well, wait a second, like there's still going to be like a 1% fee, and then a lot of these like crypto payments still like go through like a debit card, so it ends up being like no way better for like a developed country like US or Europe or something to like use stable coins as payments. um, Now, one thing where they said where it is potentially interesting is all of the developing countries, where it's like, okay, now you have access to this payment network, like stablecoins. You might actually not have good access to an existing payment network, Visa, MasterCard, um, any of these like custom, like WeChat Pay in China, for example. But stablecoins are this like open payment network that you actually do have access to, permissionless anywhere in the world. So you could see this like adoption there, right? So that's where I think like the like it's Tron USDT is like one of the most popular currencies like in the world, because like in Nigeria or wherever they're using it a lot. Um, so for like the payment side, like I don't see it being adopted, I guess, in the developed world, because like it's not for like day-to-day activities, because it's not that much better than the incumbents. But maybe it just becomes this like global thing, that kind of forces like adoption in other places. um, that's my
What?
Yeah.
initial thought, I guess.
Yeah, go ahead, Corbin.
Well, I was just gonna say, like, I think it depends on what you mean by like global adoption. If this is like, is this the thing that's gonna make everyone hold crypto in their phone, on their on their person, and like use it? I don't necessarily think stablecoins are the thing that's gonna just immediately get everyone saying, okay, well, I need to hold stablecoins, because like, why would nobody really? I don't think that's like going to be the motivator to be like, hey, you get access to the volatility. Do you know what I mean? Like, nobody really cares about stable coins in the sense that they don't care about the US dollar. They don't think about the US dollar. They just hold the US dollar. It's the default, right? So on the one hand, I kind of feel like there's not a sufficient like upside to just being like, okay, convert your US dollar into USDT, or convert your US dollar into XYZ. So I think there's like that problem. But I do kind of see that maybe under the hood of all of the future apps, say 5-10 years from now, I could see stablecoins being the thing that's kind of powering the US dollar denominated currency in that app. So the end user might be like, hey, I'm just using dollars. But under the hood, all settlements are occurring perhaps in these different flavors of stablecoins, where the end user maybe is using stablecoins, but they don't actually know they're using stablecoins. So in that sense, they are, but they aren't. Does that make sense?
Yeah, that makes sense. I think
Yeah.
like go ahead, Graham.
No, go ahead.
Yeah, I was gonna say like I also see this kind of like um how do you say it? Like I do think that outside of like the spread of crypto, I think stable coins are like spreading the dollar, and like the dollar is becoming this um even though it's like it's not a store of value, but it is like what's the other one, the means of transaction, means of transfer, or whatever. I
Medium
think
of
like the
exchange.
yeah, medium of exchange, like the dollar, crypto is accelerating the dollar's role as like the de facto medium of exchange. I think that that's true because everything is like denominated in dollars, and now everyone has very, very easy access to dollars through stable coins. So I think in that sense, like there's going to be like a goal, and it's in the US's like best interest actually now to like further that adoption. Um, so like
Yeah.
I think from a policy perspective, I guess it's like forcing mainstream adoption in that way. Stable coins are from like a regulatory or political perspective. Yeah.
Yeah, I don't disagree with any of that, but maybe I would push back a little bit on your your contention that they're not actually that useful or much like better of a system, even in the US. Certainly in like not in US countries where it's like, yeah, it's hard to move money across borders. Stablecoins are actually, I think, a really big improvement than you guys have, of course, tried using Swift in the past. More and more people are understanding this, and it's easier and easier to onboard and offboard between stablecoins and real world like things you need to buy and move it around, right? So it's growing massively in adoption. We're seeing it like what did I see a report last week? Something like 40% of the GDP of Nigeria is now moving through stablecoins. So these are not insignificant numbers. Now, I think even in the US, yeah, there are systems that work very smoothly, whether it's like even just what is it, ACH transfers in the US, or like Venmo, like these like walled gardens, they work fine. But there's more and more talk of like the social media platforms integrating payments, and it's pretty clear to me that that's going to happen in stable coins, right? And it's because it's way faster and better and smoother, and like they don't have to worry about that like all the middlemen behind it. Now, the point I'm trying to make here, or the theory perhaps, is like as more and more people onboard into crypto, right? Once they're in the stable coins, there'll be enough like inertia will reach a tipping point, and then it'll make sense for all the other like modular DeFi things, stocks on chain. And at a certain point, it'll reach a tipping point, and just like the entire financial system will move away from the TradFi rails to the crypto rails, and maybe like stable coins are the thing that sort of get it there. That's sort of what I'm thinking.
In this like bullish scenario, I would say for stablecoin and adoption, what's the time horizon that you're kind of saying though? Because I think that's the biggest thing for me is like I could see that happening perhaps over a longer term or like time horizon. I don't see people giving up their like fiat dollars for stable coins in the short term. At least not in like the I don't know what you'd call it, like the G7, the G8, the Western nations that kind of already have banking. They don't really have that friction. You know, like the people using Tron USDT are unlikely going to be like your average Joe from like Minnesota, you know, settling his like buying a new car.
Yeah,
or
but I
like
think you guys are kind of talking about the same thing, where like, will all of this new back-end infrastructure be powered by stablecoins? I would fully like agree with that, right? Like whenever Twitter launches Twitter Pay or XPay, I guess it's going to be called, like, is that going to be stablecoins? Almost like 99.999% chance yes. Now, is like, am I as a user going to be like, oh, I have 1,000 USDC, or is it going to be like, you have $1,000 on your X account, and what is that in the back end? Like, who the hell knows, right?
Yeah, it doesn't really matter in my opinion. The fact is, because it's in the crypto realm, the blockchain realm, that'll make it easier to take that $1,000, whatever it's like network it's on, and use that in the rest of crypto, whether it's to buy stocks, on-chain stocks, or some other RWA, like a piece of a real estate, or
yeah, I agree with that,
put
and I
up
think like
collateral.
it really depends on like how these like platforms approach it, because I wonder if they're gonna kind of want their own like walled garden type thing, or they're going to make it like a truly open ecosystem where like your $1,000 on X, you can actually withdraw it and put it on like in a wallet, or like there is a real wallet that you could take it off platform with. I think that'll be like the deciding factor for a lot of these guys.
I think we probably all three of us have like this bias towards like technological progressivism or something like that, where we kind of see these opportunities and see these things that like are this obviously makes the most sense. However, at least in the back of my head, governments are retarded. And the only way for this to work is for regulatory clarity, which is slowly, like, it's kind of getting figured out in the US. But I do wonder how much of this can be made into law and like codified into law, where it's so baked in and entrenched in the US ecosystem that it's forced to then expand into the Canadian ecosystem and the Australian ecosystem. And God forbid, will it ever get into the UK? Because the UK is just completely cooked when it comes to like the nanny state. There's we've had to put out releases in our app that's special for the UK that warns people, hey, this is a dangerous investment. You are being promoted cryptocurrency, danger, proceed with caution. And it's like you have special Apple and Google Play, listing like photos when you open the App Store. You go
our UK App Store screenshots are not allowed to show any numbers.
You can't show numbers in the UK, because if you show numbers, that's clearly an indicator that number could go up or it could go down. But like either way, that's dangerous according to the UK. So like on the one hand, I'm like, yeah, like technically this all makes sense. On the other hand, I think governments determine what is allowed in the financial sector, and governments by and large are completely retarded and don't have a lot of incentive to do this. Now, the US may have the incentive to do this if they can figure out the strategic Bitcoin treasury thing, and if they're the first entrant into it and can accumulate the most. And sure, there's maybe some game theory there, but
no, but
one
this is
country
the great
has to make
Trojan
that
horse, right?
Yeah.
The stablecoin is the Trojan horse, and the US is going to be forcing crypto with stablecoins as the Trojan horse, and then it all ends up going into like Bitcoin, right? Because the US government, it's so obvious that like we need to get as many dollars. You got to squeeze the juice, right? Print as many dollars and get them distributed in as many places as possible, as quickly as possible. And stablecoins are like the perfect vehicle to do that. So then I hope you will have this like cascading effect where there'll be like some stablecoin on, just like exactly like you said. Okay, now Australia has to do stable coins because the US is doing it. And now like we can't be behind those guys or like whatever. And it just ripples in that way.
There is this fear though that I have that I don't know, you'd call it like the nationalism of US right now in this current administration could create these, like if you've got a left-leaning government in these different countries, they might oppose the technological progressivism and the enhancements that, say, a stablecoin utopia could provide, simply because Trump is bad. Trump, orange man bad. We can't support this because we are a leftist government and this is pushed by the Trump administration. So how could we possibly support this? So then it turns into them kind of cutting off their nose to spite their face. But it slows this whole thing down where maybe it doesn't reach, I don't know, this global adoption utopia that we'd love to see.
Yeah. To your point, Corbin, I think just last week, Christine Lagarde said US dollar stable coins pose a risk to the ECB being able to conduct their monetary policy.
Of course, because it's not euros.
Yes, that's exactly what David noted. It's that basically, she's just talking her bags. If it was a euro-backed stable coin, then maybe she would have a different opinion. So, all right, I want to talk for a minute about Robinhood. Now, Robinhood has been killing it, to be honest. It's like emerging as this like finance super app in the US. They've got 25 million funded users, 220 billion in assets under custody. You can trade stocks there, including like fractional shares of stocks, ETFs, options, and of course, crypto. A week or two ago, they launched their own chain, Robinhood chain, I believe. It's an L2 on Arbitrum. And as I understand it, and this is maybe going back to your point earlier, Andre, about like how much of a walled garden this is going to be. As I understand it, their L2 is kind of a federated chain. So the way they're setting it up basically is for regulatory reasons, so they can keep track of, make sure everyone who's using the chain is KYC'd. But nevertheless, they're using it as infrastructure. Okay, so who knows how that will eventually like plug into the rest of crypto. But I guess my question is, right, as this space evolves, is it going to be a company like Robinhood, a Web2 company that sort of sees the opportunity of crypto and is like, they eat the rest of crypto, they eat like native crypto's lunch, they like overtake market share from the likes of Coinbase, which by the way has about the same market cap as Robinhood right now? Or is it going to be like banks who finally like step in here? And there's rumors, and I think it's true that like with, for example, the Genius Act, the Stablecoin Act, the banks are kind of shaping that in their favor. It looks like you're not going to be able, if social media platforms aren't going to be able to directly make their own stable coins, as an example, although of course there's ways around that. But yeah, so how do you guys think this is going to play out? Is it going to be Web2 fintech companies taking the lead? Is it going to be banks, or is it going to be like a crypto native version of it, like your Binance or your Coinbase, that really push things forward here? You guys have any thoughts on that?
Yeah, I'm happy to jump in. So yeah, obviously Robinhood has a great app, tons of users, people use it all over the world. But I can't help remember what happened with GameStop. And when you start thinking about like, oh, all the shenanigans of them just like closing down trading in the middle of like this kind of revolutionary retail fuck you to these short sellers on GME, and then Robinhood just kind of like, yeah, okay, we'll close it down, shut it down for a bit. And it does make me worry that the same thing could happen in a Bitcoin bull run, and then you've got all these users that have Bitcoin and can't sell. And we've seen some similar behavior from this, like in previous bull runs where certain Bitcoin banks or crypto exchanges just, go offline during the bull market. They just either they fail to, keep maintain demand with, I don't know, their AWS bills or whatever, but things start shutting down and they can't log in and people can't trade. And then they start blaming these crypto exchanges. I wonder how Robinhood would be dealing with something like that, and or if the users or retail don't even care. Like maybe that's just me having a bit of a burr up my ass when it comes to like thinking about these big Web2 tech companies that are just kind of like, they market themselves as we're for the people, and then when push comes to shove, it's like,
Yeah, my take on it is, well, I'll talk about maybe like the L2 chain and the token stocks, I guess, in particular. I think the winner will probably be one of these, I don't call like Web2, or like it's gonna be very close between Coinbase and like a Robinhood type. So kind of like native crypto but big, or like one of these like older fintechs that are like kind of, I don't know, modern. Like tokenized stocks are really interesting. Like it's another thing. It's just like the stable coins where we talked about. It's like it's clearly a better way to trade stocks and hold stocks compared to on these like weird centralized systems where you don't actually hold anything, and like what is even going on there? No clue. And trading is only open for non like 5 days a week and not on holidays, except for some stocks. And some stocks you can do fractional, but some you can't. And it really depends on all these like weird like things, right? Like none of that makes any sense. Like tokenizing stocks, being able to trade your tokenized stocks on chain is like the most obvious thing. Of course, nobody's done it because of regulation, right? So you have this like 80 years of regulatory crap piled up that makes this basically impossible for anybody to actually do. So now there's like the baby steps, right? Where Robinhood is trying to do it, and they're like federated chain, Fed chain. We'll get a Fed chain. But I think if it's like too walled in, it's not going to be successful, right? Like you're like losing all of the benefits of crypto when you make it like too walled garden, right? So if I can't permissionlessly go and get this stock and do like 40x like leverage on it or whatever, I'm not going to go and like just buy and trade in this like very closed ecosystem where I'm gonna have to like KYC and have to meet all these like requirements and stuff, because I might as well just use a brokerage. There's no benefit anymore. So whoever is going to be issuing these assets on chain, but like letting them to transact in a permissionless manner, I think that's going to be the real winner. Now, like the mints and redeems, just like Tether, might be permissioned, but like all of the on-chain trading stuff has to be permissionless. So whoever like figures that out is going to be the winner. And I think it's a big like regulatory question for that.
Well, how would you compare like this type of potential experience to something that already exists, like Hyperliquid?
Like Hyperliquid is not a walled garden really in any way, right? Like you can take the assets and withdraw them out to, if you don't do KYC, you can take them, you can withdraw them out to Ethereum, Arbitrum, like whatever, right? Like that's why people like Hyperliquid, because you get the like exchange like experience, but in a totally permissionless way. And when you
Not
do
only
the
that, but the
stocks,
fees are way less than, for example, Robinhood.
yeah, right. Same thing. So if you're a Robinhood and you're just going to be like, okay, I'm going to put these like stocks on chain, and it's only going to be available to people that are KYC'd on Robinhood, no one's going to be like, oh, sweet. Now I can trade on chain. Great, thank you, Robinhood.
Right. So from Robinhood's perspective, it seems like for now, at least, it's sort of an infrastructure play.
Yeah.
Like they're leveraging the infrastructure to reduce their overhead, like reduce their costs.
Yeah. Which is like, yeah, I don't know how that will like work out. And then there's also like the question of like how all of these stocks are going to be interoperable, like, right? Because I'm sure there's going to be plenty of people that are going to want to be the minter of Tesla shares. Robinhood, you're going to have the same thing with like stable coins. We have USD, TBC, XYZ. Is it going to be the same thing for your Tesla stock, where it's like Tesla ABCDEFG? And how's that going to work is going to be very interesting as well.
Yeah. Well, in theory, a distributed ledger seems ideal for managing like a stock ownership globally,
For
as
sure.
opposed to, let's say, some like dingy basement in New York, like where it is right now, or Brussels or wherever, for each of these capital markets, where you just have like literally piles of like files and I don't know, that's still how it works, from what I understand.
The Corbin was right from the beginning. You got to the government has to like force it through, or provide regulatory clarity, make it not illegal to do something else, right? Like that's what's got to be.
Well, this is like maybe anecdotal, but when we've Bitcoin.com expanded into UAE and talked to countless banks, and while UAE is extremely open to crypto and extremely open to real world assets and tokenization and all of these things, they're very like inviting towards these types of businesses. The banks themselves are still a little bit shy, and talking to these different bankers, they all kind of say they're waiting, they're deferring judgment on anything until they kind of get some clarity from the US. Everyone's waiting on Big Daddy Trump to decide what to do. And then once the US has decided and Daddy Trump decides, and then, the big daddy banks in the US say, okay, well, we agree with Daddy Trump, then you end up with these other cascading banks of like, you know, the alt banks in different countries being like, okay, I guess if everyone else likes it, sure, we'll do it that way too. But nobody wants to stick their neck out, right? Like all these bankers, they're a bit like career politicians. Nobody wants to be like the first in, because the first in could get it wrong, and then they get wrecked, and then they lose their job, and you know, they don't need that.
Yeah.
They've got a comfortable
right.
treasury they can sit on. If only it were a Bitcoin treasury.
Yeah. So based on that, I would say that of the, let's call it 3 contenders here, crypto native companies or protocols, Web2 fintechs, and like TradFi banks. TradFi banks have the least chance at winning this game, or like it seems highly likely that they are going to be disintermediated. The incumbents will die, and it's going to be either something like a Web2 fintech, or it's going to be like crypto rails, like native crypto rails that like finally eat the lunch of the entire global financial system. I don't know. Maybe I'm like drinking the Kool-Aid here, guys, but I feel like it's happening.
I agree. No, I think like there's either got to be somebody if it's going to be a crypto company, it's got to be somebody bold enough, like the Tether guys, that just do not give a shit that they're probably doing something illegal, and start just issuing these assets. Or it has to be somebody that's going to play it by the book in this like Web2 space and do all the regulatory heavy lifting on like the proper way to do it. So that's going to be like the battle. I think that's going to play out in the end.
Yeah. All right. Good discussion. So let's wrap things up here with maybe a grab bag of fun topics. Corbin, did you want to discuss the Richard Hart rant?
Sure. Yeah. So Richard Hart over the last week was dumping on every crypto website, and just in true Richard Hart fashion was just providing his spicy take on everything. I think he was commenting on the ethereum.org website, kind of making fun of he was very much like he's for Ethereum price going up and Ethereum adoption, but he's kind of like, what is this website? And he was going through the list of every crypto website, kind of just taking a big steaming shit on every one of them and being like, what's going on? He also made his way to Bitcoin.com, where his ad blocker unfortunately prevented him from getting too far. So we obviously had to ship that bug. But there was quite a few bugs going on, I guess, in the last week. You know, I guess a lot of improvements to be made across all crypto websites in order to get to Richard Hart level mass adoption. And I guess, lots of bugs. There was also
It's praising the marketing though, Graham. Bold, compelling headline.
Mm-hmm.
Yeah,
nice headline. I like that headline.
Yeah, that's a good one. Everything you need.
Who wrote that, Graham? Who wrote that? That was a good.
I'm
good
sure
line.
the GPT did it.
Yeah. And then I guess other bugs that occurred this week. I guess X shipped Mecha Hitler, so that was pretty funny. Lots of Grok 3 got unlocked, and I guess went a little bit spurgy.
CEO resigned. Mecha Hitler.
Yeah. I just saw a little bit of that. Like, what are some of the juicier tidbits there? I saw Grok is not a big fan of Jews or something.
Fan of Israel. I think there was also some like weird, highly descriptive, forced sexual stories that were happening to someone named William. So that was kind of an interesting, interesting Mecha Hitler kind of rape fantasy or something like that.
Yeah.
So that was interesting.
Yeah.
GMX was also hacked this week, so that was not good.
Just a little bug.
Small bug. $40 million bug.
Oh, yeah. Okay.
Yep.
Yeah. I don't know, the whole AI thing. It's very interesting. It just seems like things are heating up so fast. Um, Grok latest tests seems like Grok, because it has the access to better, like the best data, really, like what's happening in the world, and it's that like no one else has access to that. It seems that, plus on top of that, like Elon's like incredible, like the way he's managed to train it, like have all the cluster there, and they've done it right. Looks like Grok is kind of pulling ahead right now in at least the LLM space, which is
Did you
quite
guys try
interesting.
Grok 4 yet?
No, I haven't
Not
tried it
really,
yet.
no.
I was taking it for a spin last night, and it was I mean, it's good. It's snappy. It's smart. I didn't beat it up as probably like some of these you know, hardcore LLM tester guys,
Does it
but
still use M dashes?
it's a good question. I did not check.
There's too many M dashes now in AI land.
Yeah. Actually, let's just close up here on one topic. I'd like to get your guys' opinion on this. So, there was a speech that was going around. This is on the AI topic, from the CEO of Cloudflare. I want to say some service that like has like owns a ton of the web, basically. So anyway, he's saying like, look, 10 years ago, um, the Google would scrape 2 pages and give you 1 visitor. That was sort of the deal, right? You'd go to Google and you could get some, when you do a search, often you would get like an answer, but for every 2 times you just got your answer, they would end up sending you their visitors to a page, to like 2 to 1. 6 months ago, on Google, it was 6 to 1. So over the last 10 years, it went from 2 to 1 to 6 to 1. And now it's 18 to 1. So most of the like, yeah, like what is that? 80%, 20, no, way more than that. Most of the traffic that's going to Google now is not going to web pages.
The
And then
actual
if you look
pages.
on, yeah, and then if you compare that to like ChatGPT, I believe the number was 500 to 1, and then or 1500 to 1, and then on Claude it was like 60,000 to 1. So the model of the like the internet as it has been for the last decade or more is very rapidly breaking because of the way people are using AI, which I don't know, it's quite an interesting thing. And I think it has a lot of implications for like what content works on the internet. So this is not really a crypto topic, but just wondering if you guys have any thoughts on this before to wrap things up here today.
I mean, I think it's like obviously huge for SEO and things like that. I think you're gonna see less content like generated actually because it's just becoming like less and less valuable and much harder to discover. So you have to, build traffic in other ways outside of search engines, right? It has to be this like to customer, direct to audience type marketing or something like that because exactly what you said. Okay, the LLMs, even if they take your content, aren't going to send you traffic. Google and search engines are no longer going to send you traffic, so they're totally useless to you, right? Like
Yeah.
as a content creator or like whatever, um, you have to um, you have to build some sort of like direct connection with an audience.
Yeah.
Yeah.
Maybe they're still
Yeah, I was
useful
just
for like brands.
Yeah, I was just going to say that I think that the value of a community is going to become much more valuable. Like people and brands and companies and cryptocurrencies, that ability to both grow a community, maintain a community, that's going to be kind of critical for any project, I think, going forward. I think
Yeah,
there's
so
always,
maybe this is related to crypto in that like cryptocurrencies and tokens are often used as a way to like galvanize a community. And yeah, so maybe that's one arm of the solution here for creators.
I mean, I think it's definitely a lot. I think community building is a really good way of framing it, because you have to have built some sort of like connection or human like connection with like the people you're like trying to reach, because there is no other way to reach them anymore. You got to go to door-to-door marketing again or whatever.
Yeah, or
no,
another thing I thought of is maybe you just have to have a presence within walled gardens like X or other places where they still serve you like impressions, just like there's a feed, right? And people are exposed to you in that way. Like maybe that's gonna grow in prominence even more than it already has. All right, let's wrap it up there. We've gone on a bit of a tangent. Thank you, Andre and Corbin, for your insights, and thanks everyone for listening. That's it for Token Narratives this week. We're out. Goodbye.
guys.